Good evening, good morning, good whatever time it is you are listening to this. I hope you are having a good one. I'm going to be going over the datasets and the SPY for March 26, 2025. And with that said, let's jump straight to the data. If you'll pull up, there we go. Alright, so we don't have a whole ton of data for tomorrow, or today, depends on when you're listening to this. I'm going to refer to it as tomorrow though. Um, so we have Fed Kashkari speaking at 10 a.m. That's probably going to be the biggest data set for the day, just because usually Kashkari, I hope I'm not butchering his name, but usually he is pretty hawkish, and by hawkish I'm not saying exactly like a bearish stance. I'm saying more he's more willing to say how things are, um, and not exactly willing to stick with the rest of the Fed narrative. So he can be kind of a toss-up at times. Um, with that said, he doesn't have the weight of someone like Powell or President Trump, but he does have some weight on the market. So not really anticipating too much. But that's kind of the big data set for the day. We do have the Atlanta Fed GDP, but not really expecting too much out of that. And then we have the 5-year note auction at 1 p.m. Uh, the yields have been pulling down, so again, we just should expect a lower yield here. Um, the 5-year is pretty important right now. I don't have a list exactly what it's correlated to, um, but I know the last 5-year auction was a pretty massive auction, so I'm kind of interested to see what this one's bringing. It should be bringing obviously a fairly lower auctionable amount, but we'll see. I know most people aren't paying attention to that, but I'm mostly just thinking about it in my head right now. Sorry. Anyway, let's go ahead and get into. Now, we don't have any big earnings or anything, so I'm not going to discuss that in this video. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting straight into the technical analysis, let's go ahead, go to the daily chart. Let's pull up our moving averages and Bollingers so we can see the levels there. Alright, excuse me. So we have the 5-MA currently at 568.55. We have the 10-MA at 563.56. So out of all of our supports right now, the 10-MA is our lowest. We have the 20-MA, which is at 570.04. That's a very, very, very key level. It's going to be around the 69.90-ish on open tomorrow, give or take. So just be aware of that. But it's going to be very close to that 570 level, which is, a really important level. The 200 MA is at 570.25. So again, that 570 level is becoming extremely, extremely important. And we have the upper Bollinger at 594.38 and the lower Bollinger at 545.70. They're kind of out of view right now, so not really going to discuss them in this one. But once we do start heading up closer or, potentially downward, then I'll go over that. Now, what's important is that the 5-MA is very likely going to be opening almost exactly at the 570 mark, which if you just remember, I spoke about the 20 MA and 200 MA, and both of those are at the 570 mark. So that 570 area is going to be a really, really, really important level. And that's what I originally had the thesis for Tuesday, today, was that the 5-MA was going to open at that 570. And today, if I remember correctly, it opened at the 566 or 567. So it was significantly below that range of where it was reasonable to test on the day. Um, and let's just go over the hourly chart, kind of just to illustrate that a bit. Now, say we actually had the 5 mod test happen today. Now, when we have a moving average test, we usually see $1 or $2 below the range and above the range. So if we tested the 5 mod today, uh, back when it was, 567, I think it was 567.70-ish on the open, if I remember correctly. I might be wrong, but I don't remember exactly. But if we saw the 5 mod pulling downward, so say we sold off from the open today, we would have seen that 5 mod pulling down all the way to um, the 565 range, which that's all the way down to, let's just do a little drawing. That'd be pulling it back down into this liquidity zone again. And with it pulling down to that 565 range, it's essentially right at the top of this liquidity zone. So while that would work, that would mean they would also have to pull it down probably closer to the 563, which, if you could see my cursor, let me just get a little trend line out. 563. So, down at the bottom of this line right there. So they'd have to pull this down pretty majorly to achieve this goal of testing the 5 mod. Now, with the 5 mod opening at 570, this doesn't become the situation. We now have the range going from essentially the 568 to the 572, since we test the $1 to $2 above and below. So that's a lot more reasonable than pulling all the way down to 563. Uh, that's very likely. We're going to see that test happen. Just because we have three moving averages consolidated essentially right at the same level. Um, there's something important about that level, and granted, I know that the moving averages obviously have to pull through each other at some point to head back upward, but this is essentially that area of where do we head downward more and then decide to further consolidate and um, test more liquidity downward and more of the support downward, or do we decide to, okay, the market's going to actually start to recover a lot of this weight now? And if you remember in the past video and post, I've been talking about these liquidity zones. We're in this liquidity zone now, so the market's trying to decide, are we going to continue heading upward and staying in this liquidity zone, or are we going to head back downward into this liquidity zone? And that was really kind of the decision of today, and why I believe today didn't um, have that sell off as I anticipated. Um, Now, with that said, I do expect what I expected, on Tuesday today to happen tomorrow, which is, we're at the top of this cup. If I can pull it down, we're at the top of this cup right here. Let me go ahead and draw this out. Yeah, so we have this really. My mouse just jerked to the side. Okay, so we have this cup right here. Um, we're gonna pretend that's a rounded bottom instead of just like this janky thing off to the side. Um, we have this cup right here. Okay. And what we were anticipating was bearish structure to start forming here. Now, that's still very well within the thesis. Today's session didn't really change that at all. So we should still be seeing, some sort of bear structure, and it shouldn't be that high. Um, it should be, a lot closer to where the market price is right now. But we should be seeing bear structure forming here, whether it's an head and shoulders or possibly an inverse cup. But we're looking for something to signal that this handle on this cup is going to start heading downward. Okay, and that we're going to start testing, this area down here. And it should be essentially right at this 568 towards the bottom. If we do have, the type of selling that I anticipate, this should pull down and we should head almost to that 568, 569 range. Um, and that's fairly close to the bottom of both the look of the purple liquidity zone right here and the top of that yellow liquidity zone. So it's creating a really solid bounce point. There's a lot of trajectory to continue pushing this upward from here. Once we do test support, it should happen within the next session or two, because granted, the 5 mile takes 5 trading sessions to catch up to the market price. So at this point, with no other support above us, we have to really look forward to the 5 mile being a target before we start pushing too much further upward. And the reason why we want that support is because there's there's nothing above us right now besides the upper Bollinger, and the upper Bollinger is at 594. Um, that's a whole $19 away right now. So is that reasonable compared to retesting support that's only, $4 away right now? Uh, that's up to you to decide. But I think and very likely I will be looking for that bearish structure. I will be shorting down to the bottom of the handle, and once we start heading towards that 570, that's when you start looking for bullish structure. So bearish structure up here, pull downward, and start looking for bullish structure, because you want the bullish structure to start forming to give you the conviction to say that yes, this is a cup and handle. This is building liquidity to push back upward. If we're not seeing a bullish structure here, then you don't just take calls. You wait for that bullish structure, because if not, then this handle right here, and hold on, I just want to delete this, but this handle right here can further extend downward and downward and downward. Um, that's why we always short the top of the the handle. It's a very safe area to short, because once you do identify that bearish structure and you do start seeing the pull down, generally towards support, which is why I'm very inclined to say that like we are going to see that 5 mile support test very, very likely, and build out this type of structure. Now, assuming this just kind of heads the opposite direction, which it's kind of hard to say, it's going to continue heading upward at this point, but let's just make the play and assume that they do head upward. We do have some really important gaps up in this area, and um, they're not too far away from us, so technically they could pull us upward to one of these further gaps upward and take that area and then start pulling downward towards the 5 mile. I don't think that's the case, but the next gaps from here are at the 570, 572, which we're essentially at that right now. Um, then the 576.42, which we were just there in the overnight, so whether we stay there or not is kind of up to debate, but that should be the top of the cup. The next gap up from there is 578.52. That is a whole, $2, $3 away from us right now. So keep that in mind. And then the next gap from there is the 581.62. So if they do want to continue pulling this upward before they head downward for the support test, they can. They have a ton of liquidity, and we know they do because they absolutely loaded in this area. This yellow liquidity zone right here. This is a massive buying area for funds and dealers right now. So that's kind of the thesis. This can turn into a really nice inverse cup too. Actually, where's the bottom of that? We do have some. I want to look at these gap downs. So we do have some downward gaps at the 560, 843. which is right in this area. So it would look like right in there. Okay. Um, yeah, I'm really set on that 568 range right now. I really think that's where they're going to try to hit. Um, anyway, my brain's just going 1,000 miles a minute, so I'm going to go ahead and end the video here. I hope everyone has a great day and trade safe. And again, just to uh, cover it quickly, on days like today where we had a really choppy session, I'm trying not to play uh, a ton of options into that. I've been finding a lot more success just trading equities or shorting equities or playing like inverse ETFs and stuff like that. So when I do see really choppy sessions like this, I've been really focusing on those and kind of taking the lower duration contracts when I actually see like a confirmation. So say tomorrow we see our confirmation in this bear structure to pull downward, then I'm going to obviously start taking some puts as well. But overall, I'm mainly focused on equities right now until we actually start seeing some confirmation. I don't want to be having options chopped up in this area, because they can chop it up quite a bit. Okay, I'm done now for real. So have a good night. I'll see you in the next video.